Hello, everyone. Thanks for joining us today and welcome to this Specialist Trading educational presentation. Now, today I want to talk to you about getting ready for your trading to break out. As it says in the title there, we're going to really be talking about breakout trading because this is a often misunderstood way of trading. A lot of traders think they like to trade breakouts, but they're giving themselves far too many parameters, far too many rules and requirements, and that's why breakout trading oftentimes doesn't work. For example, as we look at this chart here in letter A, someone looking at this would say, well, Steve, we're already in an uptrend, as we can see. And so nothing has really broken out. There's no signs of any type of resistance, no double top, not a series of 10, 20 bars that are telling me that we have to break out of. So for all intents and purposes, this really has gone up too far and it's really overbought. So I don't think I'll do anything. Well, with the very simple tool I'm going to be sharing with you today, it would have said right at this very instance in this chart that we're not overbought at all, that in fact, a breakout is just about to occur. In fact, the breakout happened to the upside. So you could have taken advantage of that and bought right here and ultimately potentially captured roughly, I believe, a good amount of points here in just a little less than a month. So this is what we're going to be talking about, and we're going to show you how simple it is because this is really easy to apply. In fact, I developed this with Pro Trader Strategies to make it simple. For example, let's look at dominoes, okay? Same exact technique, nothing has changed here, but most traders would look at this and say, well, we've kind of made a candle formation right here. In fact, this is a morning star, very bullish pattern. So I think I want to be a buyer. But with the information I'm going to share with you today, this is not a morning star. In all actuality, there was a breakout setup right here. In fact, it broke out to the downside. You could have taken advantage of that and ultimately captured all these points to the downside. So once again, we're going to make things extremely simple. And all of this is one click away on the platform I developed with Pro Trader Strategies. This is the PTS Primo charting platform that identifies these breakout setups in advance. And that's what we're going to be talking about today. So welcome once again. My name is Steven Primo, President and founder of Specialist Trading. If you're new to my webinars, we're a little bit different from other ones you may have attended. In fact, I attended one just the other day where it was completely different from the way I present. These so-called educators like to tell you what they think the market's going to do. They give you all these levels of where you should buy and sell and what the perfect stock is to buy and what the perfect market is that you should be in right now. Well, we do things a little bit different here because we are first and foremost an educational company. So therefore, our goal is not to tell you what to buy or what to sell. It's simply to teach you so that ultimately you can decide and make your own decisions. Now, a lot of traders would say, well, why not just give me, if you've been trading for so long, in fact, 44 years, why not just give me the same signals that you're taking and I'll just mirror you? Well, in my opinion, that's a recipe for disaster. When I was struggling some 44 years ago, I asked my mentors to do the same thing. And they told me the same answer, which is everyone trades differently. In fact, no two traders should ever trade alike. They may have a signal that sure may work for them and they may make 10, 20 points off of, but because you have different risk parameters, because you like to trade so often or maybe less than what the signals generate, you may not even take that signal. You may reconfigure it or you may second guess it, and therefore your results will be entirely different. You may even have a losing trade where someone else taking the exact same signal would have a winning trade. Therefore, you have to base your decisions simply off of what makes you feel comfortable. In my 44 years of trading, this is the only way traders become consistent. So this is why our only goal is simply to provide you with that information to help you make your own trading decisions. You'll see that today in today's educational presentation. Now, before we begin, as always, we're required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this brand new tool, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also, please remember that all examples, since we are an educational company, all examples are strictly for educational purposes only. Now, another way to get education from our companies on a daily basis where you don't have to wait for a webinar is to simply follow us on Twitter. There's our handle right there if you'd like to copy it down. I post different information on a daily basis. I've already posted about a good 4 or 5 different snapshots today, anywhere from signals that our strategies and methods have generated and a little bit of explanation as to why. Also, a little bit of financial wisdom that I post on a daily basis. So lots of great free information. Please feel free to follow us on Twitter. Now, remember, as I stated in the opening statements, we're a little bit different because we are first and foremost only focusing on educating you as a trader. As you see here, our goal is not to force feed you signals, not to tell you what I think the market's going to do. Is it going to keep going lower, or is it going to bottom out and go straight up? I have no idea. But even if I did have a strong idea, it would be doing you a disservice to tell you, because that's not what a good mentor does. A good mentor simply teaches you how to trade. And that's the same way I was taught when I was struggling some 4 decades ago, and hopefully I'll be able to teach you as well. Okay, now we have a great educational class for all of you today. We have a good crowd here today, but a few things before we begin. First thing, I'm sure you've all seen it. Please remember to disable all cameras and microphones. So far, all of you have done that. I appreciate that, because we're working through the Zoom platform now, and sometimes people think this is an interactive presentation. It's not. We're not going to share pictures and ask each other questions while the presentation. This is simply a static PowerPoint presentation to educate you today. The other thing I'm going to mention is that if you have questions, please wait till the end of class. I'll answer all your questions then. You can go to the chat box and type them in as you like, but please, I won't answer them until the end, because that way we won't have to be here for 2 or 3 hours. If I stop to answer all the questions, we may be here far too long. I don't want to take all of your Wednesday morning. So please, if you have a question, kindly remember it or write it down, and I'll get to it at the very end. Now, the only question I will answer is this: is this being recorded? Yes, it is. So each and every one of you will receive a link to this recording at the very end. And so you can watch this over and over at your own leisure, all right? Okay, with that stated, why don't we begin today's educational presentation? Now, I'd like to start out by sharing with you a theme of today, and that's this: the more parameters and the more rules you place upon your trading method, the less chance of future success. Okay, think of that. We've all kind of been taught the opposite, right? The more information, the more indicators, the more screens we're looking at, the more markets we watch, pretty much the more cluttered our trading is, actually it'll be more successful. Well, it's actually the opposite. The more of that you strip away and you get rid of all this, what my mentors called useless noise, that's when you start to actually become consistent. I mean, think of it. In fact, I tweeted this the other day. Buying the most expensive pair of running shoes will no sooner, I should say, make you a world-class sprinter, just as spending the most amount of money on world-class computers and watching 10 or 20 different markets and having the most expensive platform and indicators. That's not going to make you successful or a consistent trader. It's the simple things in trading that work the best. That's been my experience. So you're going to see the simplicity in this brand new feature we have that I developed with Pro Trader Strategies. And we call it the Bracket Breakout trading method, okay? This is a really simple way to look at breakouts, and we just actually presented this and introduced it to a class roughly about a month ago, a little less than a month ago. We were already getting some rave reviews and testimonials from our students. And so this is only actually the second presentation I'm giving on it after we have already started the first class. So let me explain to you exactly what this is if you're not familiar with it. And for simpler terms, we're going to label it the BBTM, so we don't have to say Bracket Breakout Trading Method each and every time, okay? So what exactly does the new BBTM feature do? Well, it's a tool designed to identify stocks, futures, currency pairs, or just about any market you can think of that are set to break out, okay? That's all it does. It doesn't look for a trend. It doesn't look for a top or a bottom. It doesn't look for a specific pattern. Really what it does is all it's doing is saying, listen, according to the proprietary requirements, most likely there's going to be a breakout, but we don't know which way. See, that's how sensitive this is. But it's extremely simple because it's based just off one generic bar. For example, as you look at this bar right here, once we apply the BBTM, you'll see an upper buy bracket and a lower sell bracket. You see, this goes entirely against what most people think breakouts are supposed to be about. They'll usually say, well, yeah, breakout, I need to see a double top, which usually takes anywhere 10, 20, maybe even 30 bars to formulate, or some type of pattern, maybe a candle pattern that's there, or some type of pivot, something of that nature, a little bit more complicated. No, all you need to see is these brackets around one bar. That's it. That's how sensitive it is. Now, what are the setup rules? Because we're not going to just buy or sell once we see that bracket. We need some setup rules. Well, they're extremely simple as well. Okay. After a BBTM setup is displayed, the upper and lower brackets, look for the next two bars to close inside the brackets. In other words, their close has to be within the realm, within the range of that upper and lower bracket. You need that in order for a setup to be completed. So as we look at this generic bar, once again, that is our display. Now, the first bar after that, as you can see, it's a down day. It makes no difference if it's an up or down day, but where's the close? Well, it closed right here, right? So it's in the realm of the upper and lower. And now we see our second day, and the second day went up. Doesn't matter, but where's the close? Well, day number 2 closed within the realm of the upper and lower. Now, notice you'd say, well, yeah, but the candle, we intersected. So doesn't this negate everything? No, remember, we're only focused on the closes at this point. For all intents and purposes, you could have a dot graph and just see the dots. Where does the close on the dot appear? And it would be right here, or I should say right here and right here. All right, so once you have that in place, this is your setup. Now you're all ready to go. What you're going to do is wait for the first bracket to be penetrated, to be touched. And that's all your setup requires. All right, we don't have to look at 10 or 20 bars. We don't have to look for different formations, tops, double bottoms. We don't need to look for candle patterns. All we need to know now is we're going to buy if the upper bracket is touched first by a price bar, or if a price bar touches the lower bracket, well, they're going to sell if the lower bracket is touched first. That's it. Okay. Now in the course, we teach you different rules for money management, where to protect yourself, where to place your stop. We also teach you ways to exit, where to exit. But let's just talk about the introductory way of applying this so that we know how to enter. All right, so let's look at this example in VLO. Here's an older example. Once again, most traders looking for breakouts would say, well, God, Steve, I'm looking at 3 bars here. How can I even tell if something's going to break out? I don't have enough reference to see where support and resistance is. Doesn't matter. It's not based on those things. All right. First thing you do on our platform, click on Bracket Breakout. In the drop-down menu, click on Bracket, because you want to see where the brackets are going to be displayed, and right there. So you see on this bar, the market behavior, because that's what this is based on. Market behavior is telling us most likely there's going to be a big move. The only trouble is we don't know which direction. See, this goes against everything we've always taught you before. We always tell you about a strategy with a certain pattern or a certain indicator. If you apply these rules, it's good, probability that will go up or probability it'll go down. If you stay in sync with the trend, if you use the buy-sell line or the pet D, you'll know which direction to trade in. Well, here's the good news. None of those things are required to trade the BBTM. Absolutely none of them. Now, in the course, we show you ways, if you'd like to apply those to increase your odds for consistency or just to trade conservatively or aggressively, it's up to you. But to use this in its most standard form, all we need to do is apply the bracket breakout display. And as you can see, there's one right here. Now, the beauty is we tell you the price right there to the right on the display, so you know exactly where that is. Okay, so we can't just buy or sell once we see this. We don't know which way it's going to break out. So what we want to do is wait for the setup. Okay, now the setup requires 2 bars to close in the realm of the upper and lower ranges. Obviously, this one closed here, this one closed here. So we have a proper setup. Bars 1 and 2 closed there. Okay, now even if they had touched the upper or the lower bracket, that would be fine. That's okay. We're not using them to buy or sell yet. We're only using them to find out where the close is. So now that we have a valid setup, we know that if we trade up here first, we're going to buy. If we trade down here first, we're going to sell. So let's see what happened on the next bar. Well, we traded there. And so you could have gone long there, or if you want to be more conservative, you could have waited to see where it closed, but that's not required. Those are just different ways to enter. Remember, everyone should trade according to their own means. The most basic way is just the minute it trades there, you go long, okay? And even though it didn't close there, that would have been fine because look what happened, okay? Would you like to take advantage of that breakout? I see most students would say, wow, I didn't know this thing was going to take off. How did you know? Well, remember, this is based off market behavior, and the tools and requirements that formulate the bracket breakout are really sensitive, And they are basically just signaling that something's going to happen in terms of volatility. Don't know which direction yet, but it's going to happen. And this is where it works so well. Now let's look at this example in the euro, just to show you that it works virtually on any market, any time frame. This is an entirely different market for you currency pair traders, but someone's saying, well, Steve, this is in a nice uptrend. You know, I want to keep buying this because, according to the economic indicators, this is going to go much higher than what's going on around the world economically. But on our platform, all you have to do is click on Bracket Breakout tab. In the drop-down menu, click on Brackets to have them displayed. And you'll see here that at the very top of this nice little up move, the brackets were displayed. Now, once again, this could tell you that you're right, it's going to keep going higher, but it could also maybe tell you it's going to go lower. We don't know yet. It's not based on any fundamental news, not based on any economic indicators or what the other currency pairs are doing. It's only based on market behavior. But before we can do anything, we need the requirement of 2 bars closing within the range of the upper and lower bracket. So let's see what happened. Well, we both close here on these next 2 bars, okay? They have to be the next consecutive 2 bars. So as you can see, it met all the requirements. So now we can use these upper and lower areas either to go short or to go long. It's up to us. And you would have sold on the next bar if you took advantage of this. And look what happened, okay? So this is the simplicity of trading breakouts the way we are presenting them at Specialist Trading and Pro Trader Strategies. No longer do you have to worry about all these formations or different indicators or what some guy's saying in a chat room. You can do this on your own with this simplicity. This is extremely simple. So let's look at some recent BBTM signals, okay? Those were just for educational purposes so that you fully understand. And remember, if you have questions, just wait. We'll probably be finished in the next half hour or so, and then I'll answer all of your questions for you. Remember, everything you're going to be seeing is easily applied on our platform, the PTS Primo charting platform. Everything is one click away using the bracket breakout trading method. Okay, let's first start out by looking at breakouts to the upside. And these happened a little longer ago, a month or 2 ago, because that's when obviously the market was going higher. So these breakouts occurred and happened to the upside. So this was an example in United Airlines. This happened about 2-3 weeks ago. As you can see, the brackets were displayed, all right? Not much information as to which direction it's going to go. The next 2 bars close within the realm. Now, someone would look at this and say, well, I guess this is not a valid setup because they're going down and they went below the lower. But remember, for the requirements to take place for the setup, we just need to close within this realm. See, this closed here and this closed here. So they closed within the range. Even though they penetrated that lower bracket, that's okay. We're not concerned with it touching or penetrating the brackets yet. Now that we have 2 closes, now we're concerned with which direction. Now we're very close to touching the lower one. So someone could say, well, gosh, I'm just going to sell it in advance because most likely it's going to trade right here. But look what happened. The next day it went up, touched the upper bracket, and then closed lower. Now we've had a lot of students that took this in our course and they said, well, Steve, I'm already in a losing trade here because I bought and look where we closed. Now, how you enter is up to you. We give you several different ways to enter in the course. But even if you had entered right here at the upper bracket at 45.17, that still would have been fine because look what happened to the stock coming into October, okay? So you see how this broke out? Now, looking back in hindsight, you could say to yourself, wow, that was a nice breakout to the upside. But we were telling you well in advance of how to identify this. Here's an example in PRGO, Perigo Company. Once again, been going lower. Looks like it's a clear-cut downtrend. Using my standard norms and requirements for trading, you would say, listen, we're in a downtrend. You don't want to buy anything here. But remember, the BBTM doesn't use any of those requirements, doesn't care about the trend, doesn't care about the short-term movements. All it cares about is a sensitivity and seeing that a bar is set to move. It could be to the downside, continued downside movement, or it could go up. As we see here, we have the brackets. So now we wait for the next 2 bars. Even though I believe this bar penetrated it, that's okay because it's still closed within the realm. So we have a valid setup. On the next bar, we touched and closed just a little bit above. Look at the nice move there, okay? Now, obviously, there was some news that came out that caused this to jump up 7 or 8 points in just a couple of days. How did we know? Okay, how did we know that was going to come out like that? Well, remember, we don't know. This is not a predictive tool. It doesn't predict that some news is going to come out and that it's going to gap up 7 or 8 points. It doesn't predict that it's going to go to make a new high or make a new low. All it does is it just tells you there's going to be a pretty big volatile move coming up. So you may want to take advantage of this. We just have to wait to see and jump on board once we know which direction that move is supposed to go. Now, it doesn't work out like this all the time. Sometimes it doesn't work at all. But we share with you different ways to manage your money so that you can keep your losses to a minimum in the course. All right, here's an example in RCL, Royal Caribbean. This happened just a couple of weeks ago, mid-September. We have the 2 closes within the range. Here we now trade to the upside. You could have purchased this right here on the 13th, and then nothing really happened for the next week or so. So at this point, you could say, well, I'm either exiting unchanged because nothing's really happening, or if you would have been a little more patient, you would have seen that another BBTM, bracket breakout display, was generated. So let's see if this met the requirements. Yeah, it did. The close right here and the close right here. Even though they both penetrated the brackets, they closed there. So this was a valid setup to go long once more. So you could have, if you exited, you could have gotten back in, or maybe you wanted to add to your position. Either way, good choice. Then the breakout finally did happen. So sometimes it takes a little time for this to take place. Here's another example in SGEN, Seattle Genetics, okay? We're at the very bottom here of a downward move. 2 bars closed within the range, even though we penetrated, that's okay. And then the next day we close up towards the highs. Look at the nice move there, okay? As we look at letter A, this is the first chart we looked at in the very beginning, okay? There's absolutely nothing that meets the standard conventional way to look at breakouts. Remember, mostly breakouts are based off some sort of convoluted support and resistance, or convoluted double top or double bottom, something like that. And then you wait for it to break out or close above that. We don't want to make it that complicated because there's no reason to. The market is telling us with our proprietary set of rules here that there's a lot of buzz going on, that there's a lot of coiling going on just over a certain bar. So that's all you need to know if there's going to be a big move or not. All you had to do in this case, letter A, was simply to apply the brackets. We see we had the 2 obligatory closes within the range, and then you could have purchased on the very next bar and taken advantage of this big breakout straight up move. All right, so you don't have to wait for 10 or 20 bars to create some type of a top, or 10 or 20 bars to create some type of a bottom for a breakout. That's not required with the BBTM. Here's an example in ODFL. This just happened a couple of months ago in August. Here, I wanted to show you this to show you that sometimes it takes a little longer. Here's the brackets. We have the 2 setup closes, okay? And then the next bar, nothing happened. We didn't touch the bottom, we didn't touch the top, but we had to wait for the next one. So I don't want you to think that it's always going to happen on the very next bar. You may have to wait 2, 3, 4, 5 bars before the upper or lower bracket is touched. But it ultimately did touch here, middle of August. And look at that nice breakout move to the upside, okay? Here's an example in Charter, okay? Same thing, we have 2 closes within the ranges. This one even touched, but that's okay. You could have entered right here for Charter. Look at that nice breakout to the upside, okay? This goes entirely against the way most people look at breakouts. I'm sure someone who likes to trade breakouts would look at this setup and say, how would you know this is a breakout? This doesn't look like a breakout, because everything is really based off this 1 bar. That's all you need to know. All right, so let's look at some examples to the downside, okay? Now, we've had a lot of these as of late because the market has been going lower, and so a lot of stocks have broken out to the downside. Remember, we're just following whatever these breakouts tell us the direction they want to go. For example, here in Disney, all right, we had the brackets displayed right here. We have the 2 required closes within the realm, all right? Even though we penetrated the top one, it doesn't matter because we have to see the closes first for first 2 bars before we're even concerned with the upper or lower range. Once we see 2 closes, then we are concerned with touching the upper or the lower. Now, on the very next bar, we gapped below. So that constitutes itself as touching of that brackets. Anywhere touching that or below constitutes a sell setup. Now, if you wanted to, you could have taken advantage of it. I'm sure if your brokerage or your platform that goes through your brokerage would have told you that there was a pre-opening indication it was going to open much lower, most likely below the bracket. If you thought that that was still a good sell, you could have gone short, and look what happened the next day. Okay. Here's an example in EMR. We have brackets displayed, 2 bars closing within the range. The next bar opens within the range, but then closes at the very low, right on the range. So that's your chance to get short. And remember, one thing I want to mention, this is a $104 stock. It doesn't mean you have to go short. And a lot of times you can't even short these stocks, but you could buy puts. You could have some type of option spread with a downward bias. So how you decide to enter the trade is entirely up to you, okay? But either way, this should be looked upon as a negative sign, because look at the stock. You think it broke down here? This was just less than a month ago. How about DraftKings? All right, same exact example. We have 2 closes within, and then on the 3rd day, that's when we touch the lower realm. All right. Now, here's another way students like to apply this. If they don't like to go short, or they don't feel comfortable betting against a stock or a future or currency pair, what they can do is use this as an exit signal. This is something we teach in the course. For example, if you're long a stock and you've got a nice profit, and then all of a sudden you see a bracket display, well, you can use that as your stop placement, knowing that, well, if we penetrate the lower bracket, I think I'll sell my position there, because why would I want to hold on to it if there's a good chance that it's going to really go lower on the breakout to the downside? So let's say you were long DraftKings, okay, and you saw this bracket display. Well, you would have waited for the first 2 bars, and once you saw that it penetrated the lower bracket, that would have been your exit signal. And that would have been a wise choice, because look what happened to the stock, okay? Now, see, most traders holding on to a stock would start to say, well, it's going to come back. At this point, they'd say, well, we're stopping. Look, we got 3 up days here. We're going to probably bounce. And then as soon as it started going lower, they say, well, I guess I just turned into a long-term investor. That's what most traders do. Okay, I did this when I first started trading. It's a very common mistake, because you don't get out when you should. As we look at CCI, same example here. We have both of these bars penetrating the lower bracket, but that's okay. It doesn't matter. This is where students get confused, because we're only waiting for the close on the first 2 bars, and each one closed within the realm of the brackets. So therefore, all we have to do is wait for the first penetration, which was right here. This was just about 3 weeks ago, and it went down a little bit. Not a lot to say, well, gosh, that was a really great breakout. So maybe you took a little profit, or maybe you just said, you know, I'm going to hold on a little bit. But what do we have here? Well, we have another bracket, okay? Now, if you were still short, maybe you had the puts, you could use this to say, well, I'm getting out if a breakout to the upside. But look what happened here. We have the standard 2 bars afterwards, which close in the realm. Then we have the very next bar, hasn't touched the brackets yet. The very next bar hasn't touched the bracket yet. So you don't know what you're doing yet, but look what happened on the next one. There we touched it again. So if you were short from this original signal, you could have gotten short again. Or if you had covered and decided you wanted to take some quick profits, just a small little gain, this could have given you a second chance to get in. And there you could have taken advantage of the big drop to the downside. Here's an example in Domino's Pizza. Same exact thing. This was just about 2 weeks ago. The obligatory 2 bars closing within the range. Here's the 3rd bar, and even though it closed up, look what happened. It touched the bottom bracket. So where most students would say, well, Steve, I sold and I've got a big loss here. That's okay. Just hold on. We'll, either you're going to have a small minimal loss, or you're going to succeed. In this case, it worked out, because a day or 2 later, then it started to go much, much lower. Looking at Goldman Sachs, the same thing happened again coming into September. The 2 bars closing within the range. Here's the 3rd one. Now, nothing much happened for 3 or 4 days here, but you were short. This is where a lot of students say, gosh, is this really going to work out? But if you use the money management requirements that we share in the course, if you use the stop placement, you'd still be in this trade, and you could have taken advantage of this tremendous sell-off that just coming into the end of September. All right, let's go through on this chart and pool. Let's go through the basics, okay, how you would apply this. So let's say we punch up this, we like this stock, we're interested in it, but now you're a student of the bracket breakout trading method. So you say, okay, you know what? I'm going to see if there's a bracket coming up. Click on the tab on our platform in the drop-down menu, click on bracket. And there you have it, this last bar. So if you like the stock, it's not telling you to sell because for all you know, it's going to break out to the upside. So this is just something telling you that there's going to be some big movement most likely happening in pool. Just get ready for it because it may be to the upside, but it may also be to the downside. First thing we need are 2 more bars that close in the range of the top green bracket and the bottom red bracket. All right. So we kind of apply these on our platform. And guess what? The next 2 bars close in the range. In fact, they didn't even touch them. So we're excited to know which way this is going to go. The very next bar, we opened a little higher and then started to go down. So this was the signal telling you that most likely we're going to have some strong movement to the downside. This is roughly about 490. Look at the nice strong move here, right? This is what we mean by an unconventional breakout, because we're not looking at some major support or resistance. We're not looking at some pattern. It's just based off this 1 bar and then the 2 bars that follow. It's that simple. Okay, so let's recap after we showed you all these examples. Remember, the trading process is as simple as this 3-step process here. First of all, plot the bracket breakout trading tool. On our platform, where you'll only find this, click on bracket breakout, and in the drop-down menu, click on bracket, and it'll display whether there actually is a bracket there, okay? Now, once you see it, when a bracket is generated, wait for 2 bars to close within the bracket range. All right, it doesn't matter if they touch the upper or lower bracket, it makes absolutely no difference, but you want to make sure that their closes are within that range. Once you have 2 bars that close there, for example, if you have 1 bar that closes there, but then the next bar closes above, well, then the setup is off, all right? This is just the standard way to trade this. There are other ways to trade this. We teach you in the course, but I'm teaching you the most basic standard way. So if bar number 1 closed within the range, but bar number 2 closed well above, this particular setup is negated. Now, what you want to do is buy, sell, whichever bracket parameter level is touched first. That's it. It's that simple. And don't worry, as I said earlier, in the course, we teach you several different stop placements, different exit placements, and we also teach you different entries levels as well. The theme of the day, remember, the more parameters and the more rules you place upon your trading method, the less chance of future success. I'm sure you all saw in today's presentation, educational presentation, there really weren't a lot of parameters for you to really conclude with this method, right? I mean, there was just a simple setup and that was it. That's what trading should be like. It should be very simple and very basic. You have some very sound fundamental money management placements set. You have a lot of different ways to exit. And then you just simply follow your own rules. That's the way trading is. I've often said, if you're trading correctly, it's actually very boring. It's like fishing. And that's the way trading should be. But the only way you can get to that point is by having less and less parameters and making your trading simple. Now, the way we made it simple was by having everything 1 click away for you on the platform. All you have to do is click on the BBTM tab, click on bracket, and you can automatically see where these setups are occurring over and over and over again. So ask yourself, do you think this tool, this brand new feature that we've developed, can help your trading for the remainder of 2021? Remember, everything I just shared with you was not from 6 months to a year ago. Most of the examples I shared with you happened within the last month, some within the last couple of weeks. And by the end of the presentation, I'll show you that something that happened in the last couple of days. So if your answer is yes, we have a great special offer for all of you being interested in our BBTM method. Okay, we're going to offer you this with a great discount. This is the bracket breakout trading method designed to identify these big moves in the form of a breakout. Strategy concepts are not required. In other words, we're really making it simple. All the things we've been taught with conventional wisdom are not required with this particular method, okay? The market decides the direction it's going, not us. We're not going to have a pattern recognition method and say, well, we've decided that it's going to go up. Well, no, we have no idea. Now, you can apply this to any market. I mainly focused on stocks, but trust me, you can use this on currency pairs. You can use it on cryptocurrencies. You can use it on futures. Absolutely makes no difference. And you can apply it to any time frame, all right? One of the other great features we have is that they're auto-generated exit levels. Now, this is just with 1 click on our platform, you're going to see these separate levels where you can exit. This is just one of our different exit parameters, okay? But the only problem is you'll only find this on the PTS Primo charting platform. So for that reason, we're going to throw in this great offer. And for new customers, you're going to receive a full year, 12 months free of our platform, which includes these automatic exits, okay? Now, you're not going to just get the BBTM method and these auto exits. There are just a host of different other tools that we have that I've accumulated in 44 years of trading, things that you won't find anywhere else. Things like our enhanced buy-sell line, 4 different ways to tell the overall trend of the market. A strength of trend tool to tell you when a trend is running out of steam. This can help you in your decision whether to hold on to a breakout setup or not. Auto-generated exit levels, as I told you, over 90 of the most prominent technical indicators, and this all comes with personalized tech support, along with dozens more different features, different edges, and different ways to trade. Now, I know a lot of you are saying, well, I kind of understand this concept. I really don't need this because I can figure out, I've been trading for a while. I kind of have an idea when there's going to be some big movement. For example, I like to look at the Bollinger Bands, and they tell me when volatility is going to increase or not increase. And so I can use that. I can apply your same type of requirements, but I really don't, why do I have to spend the money? Why do I really need this? Because, I kind of figured it out for myself. Let's say, for example, you're looking at DocuSign right here, and you think on this breakdown bar right here, you say to yourself, this is where you most likely should have some brackets. If I had the BBTM method, I'd probably have brackets right here. I can almost guarantee that they'd be here. And you wait for 2 bars and you see that we closed in the realm. So you say, this is simple. I don't need to spend the money. I don't need to become a student. I don't need the platform. I can do this on my own. If we trade up here, I'll buy. If we trade down here, I'll sell. It's that easy. So let's see what happens. Well, we traded up and you have a nice little profit, 1-day profit. But remember, this is a breakout method. You say to yourself, wow, this thing's going to break out tremendously. I'm probably going to, just got in at the beginning. This thing's kind of going to go up for the next week or two. So, man, I think I'll buy some more and I'll just stay in this for a while. So you decide to really be bullish on this, and then look what happens, okay? So maybe you're right. There was going to be some volatility coming in, but this wasn't a valid BBTM setup. So you got in on something that was really just fabricated on your own doing, and it wasn't very valid. So that's why you really need this. This is not something that you can just say, well, I understand the concept and I could put 2 and 2 together and do it myself. So let's break this down, okay? We want you to be one of the first to trade the new bracket breakout method. We already have 1 course of students that have decided to take it. Jump on board. We have tremendous testimonials from students that have taken it that are really doing successful trading with it, and it's really increased their odds for consistency. So come on board, be one of those first students. Now, here's our special. Normally, the bracket breakout price is $49.95. That's how popular it is. But we're going to discount for you today. We're taking off $1,000. You're going to save $1,000. We're going to drop the price down to $39.95, but we're also going to offer you payment plans. So if you can't come up with $39.95, that's okay. For a small deposit, you can still be up and running and just establish a payment plan with Pro Trader Strategies. And remember, this comes included with a full year of the platform, absolutely free. That in and of itself is an extra $2,000 we're cutting off the price. So you're going to get a great deal of savings here just by the initial savings alone. And then when you include the full year of the platform, you're really getting a great offer. Now, if you're still not convinced, look at this example right here. This is the spiders. That's the ETF that represents the S&P 500. All right. Remember, just a week or so ago, the market fell out of bed, right? The very first time we started to go down in the entire last year. It was a pretty big move. The markets were really going. And since then, we've started to go down again. But we initially had that initial sell-off. Was the BBTM involved in any of that? Well, all you had to do, once again, was click on the Bracket Breakout tab. Whoops. See that, yes, we did. We had a setup right here on the 13th of September, a couple of weeks ago. Here are the 2 closes within the range. Here was the 3rd bar. Now, even though the 3rd bar closed in the middle of the range, it touched the very lower bracket. That was your setup to go short. So if you were long the market, or maybe you had some stocks in the S&P 500, maybe this would have given you a clue to tighten your stop, or maybe to exit a portion of it, or maybe just to get out of everything altogether. Or maybe you wanted to go short. You could have used that to enter short, because the next 2 days we saw the market fall 1,100 points. All right. This just happened a couple of weeks ago. And if you're still not convinced, I want to show you a snapshot of the diamonds. This is the ETF that represents the Dow Jones 30 average. Okay. I took this snapshot about 30 minutes before we started the presentation today. And I asked myself, is the Dow Jones Industrial Average about to break out? Which direction? We have no idea. But if I clicked on our tab here, look at this. We have a display above a bar 4 days ago. Here are the next two bars, which closed in the realm, top and bottom, okay? Here is today's action when I took this about a half hour before. So ask yourself, do you think this could help you? This just happened this week. There are only 3 months left in 2021. Do you think bracket breakouts can help your trading for the remainder of the year? I've showed you examples within the last month or two. I've showed you examples within the last week. This is a really powerful but extremely simple way to trade any market, any time frame. I think you'll be convinced that it can really help you. And if you're sincerely interested about taking your trading up a notch, contact Pro Trader Strategies, okay? This is how you can become a member, or if you just have questions about price, if you want to establish a payment plan, I would strongly suggest giving them a call at 310-598-6677. Pro Trader Strategies is in charge of all the pricing, all the discounts, all the payment plans. They're also in charge of tech support. They have trading consultants on the phones right now to be happy to take your order. Or if you just have questions about the discount or establishing a payment plan, they can give you a quote over the phone. There's absolutely no obligation. You don't have to purchase anything, but remember, this is not a extended offer. This is for a limited time only, where you're going to save $1,000 off the price, where you're going to have a payment plan if you like, and where you get a full year of the platform. So this is a great, great offer. Now, if you're interested in finding out more information, you can go to the sign up page and the info page. That's the link you see at the very bottom. Okay, but let me just post that on our chat box. We just posted that link because the link on the screen is not live. But if you go to the chat box on the Zoom page there, you'll see that there's a live link posted for everyone. You can just click that on and it will automatically take you. Okay, so we have a few minutes left for question and answers. I thank you for holding off and waiting. If you do have a question concerning what I just taught you right now, or what I was displaying about the bracket breakout trading method, just go to your chat box, write it in right now. I'll answer it to the best of my ability, okay? And I'll leave you this information up here. Let's see, we already have some questions. What time compressions are best with the BBTM? Well, actually, it makes no difference. I always say the best time frame or compression, which you're asking, is the one that makes you feel the most comfortable. The only thing I say with all of our strategies, with all of our methods, it doesn't have to just apply to the BBTM, but with all of them, is that the smaller time frame you go, we're talking about intraday trading, obviously. Anything less than a 30-minute time frame, that's when you're going to see a lot of that whipsaw action. So I would just be very careful, because on a standard day, there are numerous times, because I'm an intraday trader myself, so I know this firsthand. There are numerous times where the market just goes sideways. And if you're an intraday trader, you can get whipsawed a lot. Now, on days that we've been having lately, where there's a lot of volume, a lot of volatility, the bracket breakout trading method works great because it doesn't get involved with a lot of that static noise. So it's up to you, but I would really strongly suggest anything less than 30 minutes to just be very careful with. 30 minutes and above is fine. And this is with any of our strategies. Once again, I've said this before for strategy number 4. I said this before with using the PET-D or the PTS XT, with the smaller time frame, and this could be someone else's method as well. You'll always have more difficulty because of the noise associated with it. I'm not trying to be facetious, but we leave the time frame up to the student. That's our concept. That's our philosophy. I went over this earlier. I said, no two traders should ever trade alike. A good mentor does not teach you, or I should say a good mentor does not trade for you. He teaches you how to trade. So I've never told a student what's the best time frame, what's the best compression, or what's the best market. That's up for you to decide, because I have some students that say, Steve, I love your strategy. I love your method. It works great on a 5-minute chart of the euro dollar. And then I'll get some other students to say, Steve, I love your method, your strategy. It works great on the weekly bars of stocks. And then where someone said it works great on a 5-minute chart of the euro dollar, I'll get another email saying, Steve, this is terrible on a 5-minute chart of the euro dollar. So everyone brings their own baggage, their own priorities to trading. Therefore, you have to make your own decision. That's really what's more important. So I'm not just trying to duck the question. I hope that answers it. Let's see here. We have another question. How much would the platform cost after the full year? Well, don't quote me on this because once again, that's more of a question for Pro Trader Strategies, but I believe it's less than $100 cost. After, I believe it's $100 or $97 a month, but that's something to ask Pro Trader Strategies. You still, if you purchase something or decide to get a strategy along with that, I'm sure they may even waive the fee. I don't know. So that's something to discuss with them. All I can tell you is that Pro Trader Strategies is separate from Specialist Trading and the fact that I'm involved in all the teaching and trading of the strategies and methods. They're in charge of all the pricing and discount and tech support. And I know that they're very flexible. They're very flexible with price. So they'd be willing to work with you. So that's a good question, but I know it's extremely cheap. I know the other day, I was talking to someone and they were using a platform that I won't mention that will remain nameless, that they were spending nearly $500 a month on just for the use of the platform. And I can honestly tell you that whatever was on that platform is minimal to what we offer you. Most of the things you'll see on our platform, you won't find anywhere else because there are things that I've accumulated and taken in my 44 years of trading that you won't find anywhere else. They're tips and techniques from the floor, the trading floor. So this is really the difference between us and a standard platform where you have the most conventional ways and things in which to use. You don't find a lot of that where we are. Sure, we offer you some things, the standard technical indicators, but there's tools and techniques that most people have never heard of before. And they say, what is this? Okay. So they're really good. They can really help you. All right. Good questions. Anything else? Yes. The educational correspondence means that you all get, once you become a member of the course, you all get my personal email and you can contact me whenever you like. This is something also we offer that's different from most courses. Many times you'll get a phone number or an email address and it goes directly to an intern or to an assistant. And that's how you can have your questions answered. Well, everything that you ask in your personal email comes directly to me. All right. There's no one else that's going to see the email other than me. So I answer all questions. In fact, I had a student ask a question yesterday about a completely different strategy, and I answered it right away. And he was so surprised. He was like, wow, I'm not used to this. I thought I'd get my answer within the next week. I said, no, that's not the way. We're a small company, and this is the way we like to do. We're traders ourselves, and we want to take care of you. We know what it's like to wonder about something and to say, gosh, I wish I could find that out right away. So I'm not promising that I get back to everyone in the next 5 minutes, but I do my best to get back as easily and quickly as possible. And many times it's within the next 24 hours or less. But all questions come directly to me, not to someone else. So it's just like having your own personal private mentor right there alongside with you. Okay. So it's one of the added features that we have for all of our courses. And this is also included with the BBTM. Okay, any more questions? Let me see if there's anything after that. Okay, remember we have posted the link that you see at the very bottom of the page down there. So if you're interested in going to the info page, all you have to do is go to the chat box and click that on and it will automatically take you there. If you're at anywhere interested in becoming a student of mine in the BBTM method, please contact Pro Trader Strategies. There's absolutely no obligation, but give them a call at 310-598-6677. You can get more answers about pricing, about setting up a payment plan. And remember, they're there to work with you. They're very flexible and they can answer any question concerning cost that you have, okay? Okay, if there are no more questions, as we close here and take one last look at our disclaimer, I just want to say thanks to all of you for spending time today and taking time out of your Wednesday. And most especially, I really look forward to all of you becoming students of mine in the Bracket Breakout trading method. Thank you so much for taking the time. I wish you a great day trading, and I'll see you next time. Bye-bye.